This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Saudi Arabia, the world's biggest oil exporter, on Wednesday lowered its July prices for Asian buyers after OPEC Plus hiked output for a fourth month, although the price cut was smaller than expected. Saudi Arabia's state firm Aramco cut the official selling price for the flagship Arab light crude it sells to Asia for July to $1.20 a barrel above the Oman, Dubai average, 20 cents lower than June and the lowest since May. Organization of the petroleum exporting countries and allies such as Russia are raising output. 8 OPEC Plus countries on Saturday agreed to another big increase of 411,000 barrels of oil per day for July, having increased output by the same amount in May and June.
U.S. crude oil stockpiles fell last week as oil refiners ramped up production with the start of the summer driving season, while fuel inventories rose amid weaker demand, data from the Energy Information Administration showed on Wednesday. Crude inventories fell by 4.3 million barrels to 436.1 million barrels in the week ended May 30th, the AIA said, compared with analysts' expectations in a Reuters poll for a 1 million barrel draw. Refinery crude runs rose by 670,000 barrels per day, the AIA said, while utilization rates jumped 3.2 percentage points to 93.4% of total capacity.
Moving on to the top news in the energy sector.
A surge in clean energy spending is expected to drive a record $3.3 trillion, €2.89 trillion, in global energy investment in 2025. Despite economic uncertainty and geopolitical tensions, the International Energy Agency, IEA, said on Thursday. Clean energy technologies, including renewables, nuclear, and energy storage, are set to attract $2.2 trillion in investment, twice the amount expected for fossil fuels, the IEA said in its annual World Energy Investment Report. Solar power is expected to be the biggest beneficiary, with investment forecast to reach $450 billion in 2025, while spending on battery storage is predicted to surge to around $66 billion, the report said.
Europe's power generation mix looks set to get dirtier over the coming summer after an enduring dry spell depleted reservoirs and crimped hydroelectricity output. Hydro dams are Europe's third-largest electricity source after natural gas and nuclear plants, and historically reach their annual production peak just before summer as snow melt and spring rains recharge dams and river systems. That network of reservoirs and run-of-river hydro plants is then typically used as a key source of so-called dispatchable power, which can be discharged on command by grid operators to balance system power needs. Next, we have the top news in metal markets. Gold prices were little changed on Thursday as investors assessed weaker than expected U.S. data and ongoing global economic and political uncertainties, while looking ahead to U.S. payroll data due a day later for further cues. Spot gold edged down 0.3% to $3,365.73 an ounce, as of 0611 GMT. U.S. gold futures were down 0.3% to $3,388.90. At this stage, minor fluctuations in prices do not determine the overall direction, as gold continues to hold up relatively well, said ANZ commodity strategist Soni Kumari.
Iron ore futures dipped on Thursday, as the focus shifted back to softening steel consumption in top consumer China's off-peak demand season. The most traded September iron ore contract on China's Dalian Commodity Exchange closed daytime trade 0.14% lower at 701 yuan, $97.60, a metric ton. The benchmark July iron ore on the Singapore Exchange lost 0.8% to $94.07 a ton, as of 0701 GMT. Given the lack of core driving forces, prices of the key steelmaking ingredient are expected to fluctuate amid seasonally weak demand, analysts at Galaxy Futures said in a note.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures extended losses on Thursday, snapping a two-session rally, tracking weaker rival edible oils at Chicago and Dalian markets, as well as profit-taking actions. The benchmark palm oil contract for August delivery on the Bursa Malaysia Derivatives Exchange lost 29 ringgit, or 0.73%, to 3,919 ringgit, $924.29, a metric ton by the midday break. The palm oil futures were seen trading lower on profit-taking, energy prices and weaknesses in related China and US vegetable oil markets, said Anil Kumar Bagani, head of research at Mumbai-based vegetable oil broker Sunvan Group.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.